if I remember correctly, your private mortgage business died.
Yeah.
Died.
So like that
so then
cash flow
you had
disappears.
no choice in a way but to just go all in. You were working on it, but you went all. That was what pushed you to go all in. And there's kind of a lesson in that, which is, you can't do these things and hedge. When you do them, you have to, because if you did not get that COVID period, as dark as it might have been,
I agree.
I don't think you'd be where you are now.
Do you remember?
Hey everyone, thanks for tuning into the Canadian Private Lenders Podcast, a show covering the private lending industry, the mortgage broker space, and the Canadian economy. Your hosts are Neal and Ryan McNeil. Enjoy.
All right, everybody, welcome back. It's episode 87 of the Canadian Private Lenders Podcast with your hosts, Ryan and Neal. Neal, we're back in the center of the universe, buddy.
We're back
to TO. We got some very special guests with us. Our first two-time guests actually on the show. So this is pretty cool, actually. So we've got a couple powerhouses in the Canadian mortgage space. We got Joseph Fooks here, co-founder of Mortgage Automator. And then we've got the partners from Grechi Carter, Daniele and Dave. My head went completely blank here. Maybe we can cut out those the 10-second delay there.
Shorten that pause up a little bit.
That was an awkward start.
I actually don't mind it because he knows Dave better than me.
Yeah, I was debating throwing out your last name, and I was like, I'm going to stumble on that, and then I just stumbled on Dave instead. But anyways, sorry, Dave. Anyway, should we jump straight into the Leafs here, or do we pivot and maybe talk a little business first, and then leave that for the end? Yeah, that's right. We're recording here in midway through the Stanley Cup Finals, I guess, with Joe's Florida Panthers with the lead.
Joe's Florida
back-to-back cups, baby.
But let's save the Leafs towards the end here, maybe a couple other topics. But where do we want to start today, Neal?
I'm thinking hair plugs.
Okay. we already went pretty in-depth on that before recording, but you guys want to go a little deeper on
I'm just going to say, we did this again a year ago, and Joe and I have doubled our hair since.
You have very nice hair.
Yes,
it's the first thing I noticed.
You as well.
Thank you.
I'm feeling like I didn't get a haircut. I'm freaking out, but it's crazy now. Like I look in the mirror, I'm like, this is sick. I get up in the morning and it's all puffed up. I'm like,
wait, give it a few more months.
It's so
like
good.
By the end of the year, you're going to notice a whole different.
So I'm 6 months in. They said like a year in, it's even better. Like it.
Yeah, the year is when you get to like fully see the results.
Oh, I can't wait. I'm so happy with this. Anyone who's thinking of doing their hair, just go and do it. It's the greatest
Nothing
thing.
to be ashamed of.
I went to Turkey. You were fancy and got it done in Canada. Both amazing.
Yes.
So.
Both results are perfectly good.
Well,
yeah,
you guys are looking fantastic.
Thanks,
looking awesome. So let's go into it. I'd like for you guys to kind of introduce yourself to the guests as well as guests of our show, and also I just wanted to make an announcement here that you guys are going to be sponsors for our show going forward, which we're super excited about. Obviously, tons of synergies between our businesses here. So we're very thankful to have you guys here today and have you guys sponsoring the show. But why don't we go around the table and you guys can kind of introduce yourself, talk about your background and your business before we dive in a little deeper.
Sure. Joseph Fooks, co-founder of Mortgage Automator. Super excited to be sponsoring you guys. You guys are obviously a customer of ours as well, and we truly appreciate the long-term support you've given us. And so we want to reciprocate because we believe in the podcast. We love what you guys are talking about. We're a software, mortgage origination and software business, and we provide software for the private lending space, credit union space. And I'm really excited to be announcing some new things shortly on this podcast. We're actually doing it with you guys, and I've got some special guests that we're announcing it with. So, really excited.
Beauty.
Yeah, Dave Carter, one of the founding partners at Grechi Carter. So we've been a real estate law firm in Toronto for the last 14 years. Danielle and I met in law school, became friends, and kind of wanted to forge our own path in the real estate industry. So we sort of jumped ship from the big firm trajectory right off the bat, went out on our own pretty well first year out. And never looked back. And we've built up a great team of clerks and lawyers. And we've sort of targeted the private lending space as our kind of our niche and go-to area. So that's the major focus of our firm. Probably about 70 to 80% of what we do is with private alternative lenders. Res and growing in the commercial space. And we're kind of excited to be sponsors and be here today and working with Mortgage Automator. And we'll talk about some of the cool stuff we're working on with them and coming out with. And
I just want to say something quickly. I'm pretty sure I was your first private deal.
you were our first private deal. Yeah.
14 years ago.
It's amazing that we
You
stayed
broke
in the
us
space.
all the way back.
I remember I got in, I met these guys. I'm like, you guys do privates? They're like, totally. Yeah, we totally do privates. I'm like,
You do now. Yeah.
He's like, we got to learn how to do privates.
Never looked back.
He's like, she's onto something. We got to figure out these privates,
That's
Dave.
awesome.
What are these privates? What are they? Was he talking about something else?
better just agree to it.
Daniele?
So yeah, Daniele Grechi here. I echo everything Dave said. Just really happy to be a part of this. The way we've built our firm is very much like a family model. Dave and I have known each other forever, and we've gotten really close with all of our clients, and anybody that we do business with. It's like they're a part of our lives. And Ryan is definitely one of those people. Joe as well, and just happy to participate in this and be involved.
Awesome. All right. So, I mean, a bunch of topics we want to touch on today, and I want to get into Lawyer Automator obviously today, but I do want to kind of go back to the start with Automator as well, and just so you can kind of like paint us a bit of the picture, like a little bit of your history. I know we talked about it before, but like, what was the reason for doing this? Obviously, private lenders didn't have something like this in the past.
Sure.
And there was those operational pain points that, there was a lot of manual tracking and a variety of other reasons that you guys kind of put this together. But can you kind of give us the Coles notes on why this came together?
Yeah, so it's crazy to think about it. It's actually been 10 years since the idea came about. It was originally just to generate like basic documents, like a term sheet. We took a Filogix application, dragged and dropped it, ripped all the data, and what would take normally a human being like 30 minutes to manually prepare on an old template, we were able to replicate it while I was on the phone with the broker. I think that was the game changer. Yep. I literally call a broker when they would submit a deal to me and say, hey, so like, what are we looking here? We're going to do like this rate. We're going to do this fee. And the guy's like, yeah, that sounds good. I'm like, oh, by the way, do me a favor, check your email. And he goes, how did you do that? Yeah. And when I did that, I knew we had something. Yeah. A lady had seen me on the golf course. Her name was Christine Zhu. I think we all know her. She's the apex predator of the women in this industry. She's done a lot for the space.
You gotta get her on as a guest, actually.
Christine's amazing. I really look up to her. And so she looked at me and said, like, what is that? Literally, like, I'm like hole sitting in Niagara Falls at a CMBA event. And she's like, I want that. She goes, I have some other software. I don't use it. I want this. And I went home, had a long drive, an hour and a half drive home. And I'm like, I think we can sell this. We had nothing, obviously. It didn't really do anything. But then the idea came to commercialize it. And obviously here we are today, 450 private lenders later, and US and Canadian, coverage. So we're obviously the product's evolved. We're evolving with the industry as well. But there was a need and we needed to fill it. And there's always a risk with that because you're bootstrapping, spending a lot of your own cash, and kind of like, the grind, not seeing any monetary reward for years. But,
So
Here you
cool. Going from, all of us have had that moment where you get some idea and you're like, hey, this would be, people would love this, or this
it was
would work.
incubated in your office. Do you remember we were renting a room in your office?
Yeah, 100%.
One room.
Yeah,
and
100%.
I said to you guys, I have this idea, and they're like, yeah, run with it. So
But it's
they've been along for the ride, man.
It's so easy
That's cool.
to say, and then to actually start creating it into something more.
Yeah.
Start selling it to people. As great as it is, all the flaws it has, have to address every single one of those flaws and bring it from something that's good for your business to something you can legitimately sell.
Yeah.
To many businesses, and then you've got, handle all the complaints and all the minor issues, and just to get through that process. I watched you go through a nightmare, and it's so cool to see
Was there
where
ever
it
a
is
point?
now.
Was there ever a point when you're going through it that like,
Calling it quits?
yeah, because it's obvious, like, oh yeah, like everyone's operating off Excel spreadsheets. It's a giant mess. Like this seems really logical, but like sometimes when you're going through the whole process,
I would say the darkest days were COVID. Like if you were to
Early COVID,
you'd zone in. Like I had sales about to happen, and like you're grinding sales out in the beginning. Like every sale's so important, especially owner selling, right?
Yeah.
And then you get the news, your twins are born, You're like
They
literally
might
trying to
not get that one, Joe.
you're trying to figure out like what to do, and then like your lending business being shut down, which is funding the automator business, right? You got payroll because the company's not profitable yet, and people are canceling their subscriptions. They're like, I don't know what's going on. I'm not buying the software anymore. We're going on hold. And then like a few months later, people can't leave their homes. They're like, hey, is your software web-based by any chance?
Yeah.
Because my software currently, I can't get onto my computer at the office. Oh. And as horrible as COVID was, like it really gave us the
Opportunity to then.
Well, I was going to say the way I remember it for you was, I don't know how well everybody remembers the COVID market, but for Dave and I, because we run such a volume business, like you starkly realize it. I remember, I don't know if it was 2 or 4 months, but there was a few month process where our deals got cut by, I think, 80%.
No one was doing deals.
I think it was 80%.
Nobody was lending.
And everybody thought the market was going to absolutely
selling.
die.
we stopped lending for
Crazy.
5 months.
So if I remember correctly, your private mortgage business died.
Yeah.
Died.
So like that
then
cash flow
you had
disappears.
no choice in a way but to just go all in. You were
remember
working
that?
on it, but you went all. That was what pushed you to go all in. And there's kind of a lesson in that, which is, you can't do these things and hedge. When you do them, you have to, because if you did not get that COVID period, as dark as it might have been,
I agree.
I don't think you'd be where you are
Do you
now.
remember when they finally let us onto the golf course and we were like in those carts and we were divided by those plastic, whatever it was. And I was talking to you guys and I said, we're not lending money right now. Our investor base was a little bit different than typical mix.
Oh my God, I remember
true.
that.
And
now.
I
They
said,
literally
I
said they
think
will
I'm
not
going
put
all
money
in
out
on
this
Automator
market.
right now.
Yeah.
I said,
Yeah.
I'm all in.
Yeah.
Because we weren't busy enough, so we could run the lending company.
Yeah.
But then like you get your demo a day.
Yeah.
But then like all of a sudden the demos, like I'm doing 5 demos a day.
Right.
And then like all day, every day, like 5 days a week, you're doing demos because like there's this need for this product.
Where were the leads coming from? Like obviously the demand became.
I was cold calling the industry like crazy. I knew everyone in the space. That was like my saving grace, was that like I knew a lot of people. And then like I had a few big guys jump on to support us.
Yeah.
They kind of like took a chance on us. And from there, we started using their names as references.
Yeah.
These guys were helping. They were telling clients about it, who they were
That's huge.
representing.
Once you have a couple good,
Because
you guys were also at every single conference there
Starting
was.
around
Do you remember that?
Sir, I do. That's how we met you guys. That's how I met you and Lori originally. Was at a conference.
We were literally like, we'd look around the area and we'd see like all these lenders exhibiting. I'm like, man, it would be amazing if one day they were all using our software. And then I go to the events now and everyone,
They all
like
are.
maybe 1 or 2, are not using it, other than like the banks, the home capitals, Equitables, whatever.
Yeah.
But like every private exhibiting at those private, like those broker events is pretty much using our product in one way or another. And that's
There's a
really
couple
cool.
things that resonated from the kind of the stories you told there, Joe. So one, the web-based software, I think was a game changer. We in our previous lending business were one of the early adopters of Automator and never regretted it, and have only grown with you guys since. But the other thing which is relevant to all of our businesses is speed in the private lending space, right? And like the story you tell about being able to produce a commitment while you're on the phone with a broker is game changing to the industry. It really is, right? Like, because if you can produce that and save that, it might be half an hour for some, but it could be half a day or 2 days for people who are doing that all manually, right? And literally now where you get a FileLogix application, it's all produced, everything's filled out. You maybe change your rate, change your fee,
right.
You press a button and you send an email, right? It's completely changed the industry.
And it's been more digitized now, right? Like we've pipes with all the broker softwares now. So like from any software, you can get a deal digitally with a credit bureau, added the FinTrack compliance to make sure that we're making sure that everyone's doing everything above board, enabling people to do things above board. Again, it's just a constantly evolving business.
Well, you need it in this industry, right?
Yeah, and then literally like we developed a process with Grechi Carter on the lending side where things got so efficient. Just from generating their lawyers' instructions.
Well, that's how you built your private. That's where I remember you guys became competitive, is because we had such a close relationship with you. And
we were closing deals in 24 hours.
It was back in the days, 10 years ago, it was a really different industry. I think anyone who's been in the industry for the whole time knows that it was more of a Wild West before. Now there's a lot of institutional money in the space. And before it was all this private money. And these guys had raised a whack of money. So their competitive edge was, well, we can fund huge deals and we can fund them in 36 hours.
Yeah.
And in those days, 24 hours. We've done deals literally, I think we've done one for you in 12 hours once.
We did same day closings.
We did
Did it
same day
morning
closing.
of, and then it's
Crazy.
out.
Yeah, we were
done by
instructing
end
you
of day.
basically like at night after like our appraisal was done or site was done, you would get the deal 9 in the morning. And then like it's out the door 10 o'clock in the morning, 10:30.
Wild.
The lawyers, clients already signing at noon and we're funding 2. And then like the deal's registered, title insured, everything by the end of the day.
Yeah, our clerks love that.
I'm sure they do.
Oh, another deal from Joe. Oh, it's lunchtime. I can't deal with
Well, it was
this.
a lot worse when you were
and
in the office going in and yelling at them yourself.
It was actually like, it
Joe, you
worked.
can't come to the office anymore.
It worked,
exactly. Oh,
but
yeah.
it didn't work.
Yeah.
Because they hated me.
Right.
But
No, I
Grechi
love them
Carter
too.
loved me because
Yeah.
we were sending them a lot
Send
of
the
business. And then from
Absolutely.
there, as Automator customers started coming on, they saw the efficiencies. They knew about the efficiencies that we were dealing with. And so like these guys started getting the introductions and they started taking a lot of those clients.
Yeah.
And like the Automator process worked very well with Grechi Carter.
Love it.
So
we helped them build it. We kind
Yeah.
of built this process together.
Yeah.
In some ways,
Yeah.
we really helped build Automator. Not that we're partners or anything in
well,
it. but-
definitely the LA side for sure.
It sounds like you're
it's-
asking
it's-
for equity right now.
Yeah, come on, Joe.
Too late. Feel free to talk to Bessemer
Yeah.
about
Listen,
that.
now we've got public pressure on Joe. Can he say no? No. He's
Yeah.
gonna look like
I
an
could
asshole in
absolutely
front of
look
all
you
his
straight in the
customers.
face and
That's
say
why
no.
we came here today.
Come on, Joe. Guess what we're entitled
Do
to?
I look like I'm sweating right now?
We will
Bit of
talk
a
about
glow.
everything you said in the hallway if we don't each get a little piece of equity right now.
But this is making me really think of something kind of what's been special about our firm and what's special about Automator as we kind of grew in this industry together. And I think it gave Dave and I as lawyers an advantage because we literally helped underwrite deals or learned from, Joe and his team about how they underwrote deals. So it's one thing to understand the legal process of these deals, but when you truly understand the business mindset of your clients, how they look at deals, what their imperatives are, how they underwrite credit reports, how they look at borrowers, it gives you a different perspective on how you set up your legal service. And Joe also had sort of really in-depth insight into how the law firms worked. So he was able to tailor his business and help us tailor ours to create that kind of synergy. And that's, to me, what Mortgage Automator is a reflection of, is sort of that co-growth that we sort of experienced together.
For sure.
Like,
Think about it. Like no other software before that even had lawyers' instructions. You'd send them a commitment and the lawyers had to figure it out.
Email.
That's crazy.
And it's an email. So like that little 2-pager, it tells them who's on title, the amount, all the fees, all the checks to cut. There's no thinking. Their clerks just don't have to even crunch numbers. They're just boom, 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 cut the checks. And so the process of like again, everything is so competitive today, from mortgages to legal services. There's a lot of law firms. There's always like a race to the bottom when it comes to price with law firms. And I think where these guys stand out is the service. You're getting the service. You're getting your deals done. Like no one cares to wait 3 days for deals to go out.
Yeah.
Right. And so like from that perspective, we built that process with them. We said, look, what information do you want on the documents? And a lot of lawyers, other law firms like in Nova Scotia are probably benefiting, and you're making that law firm potentially a little
100%.
bit better.
Absolutely.
Yeah.
We've got the complexity of it being in Atlantic Canada. We cover 4 different provinces. So that means we need to have at least 4 different sets of lawyers to deal with, right? So having that organization there and being able to use that has made it cleaner and then moves the process along
Yeah, and the
faster.
system knows if it's New Brunswick or if it's Nova Scotia,
We-
send this instruction.
We've done a ton of deals for you where, we're registering on 2 proproperties in
Yes.
Ontario. There's another lawyer registering,
Almost all the deals we do with you guys
Exactly.
have involved
Some
that
sort of
complexity
collateral.
of multiple provinces, right, where we're securing properties in Ontario as well. So before we kind of go to where you guys are kind of crossing paths now with your new innovation in the space, got to talk about enforcement. This has just been a buzzword. Do you want to touch on this one, Neal?
Dave's
Yeah,
wrong.
I know you love this stuff.
This is a Dave's specialty for sure.
So-
King Carter.
yeah.
First question is, before we talk about the actual process or anything like that, how is that going now in this world? I have been Mr. Pessimist. I've always been labeled this in every podcast I've ever been on because I'm freaking out about the market. What's going on in Ontario right now?
And
Is
just-
enforcement creeping?
Just before you jump into that, Dave,
guess
I
we have
just
the
want
stats.
to. There's this headline that came out this past week. So Ontario delinquencies reach alarming highs amid mortgage renewal surge, And the stat is showing that the 90-day plus mortgage delinquency has surged 72% versus the same period last year. So
yeah, I mean, alarming kind of depends who you are. If you're an enforcement lawyer, it's not alarming at all, is it?
Opportunity reaches all-time high.
Yeah, exactly, right? It's quite a funny one for Danielle.
David Carter buys his first yacht.
Yeah, right? Quiet, I haven't closed on that. No, on that, it is a funny one for Danielle and I because we built our business initially just on the transactional side, and all of our clients have essentially become friends. So, when the markets had these, this is really the big one we've had. Maybe 2017, we had a little dip. COVID, we had a little dip. This is the biggest one we've had in the last, 20, 30 years or whatever it's been. So when this dip has happened, it's been big for our enforcement business.
Mhm.
But on the other hand, we're nervous for our clients and our friends, and so it's emotionally, it can be a little bit tough sometimes. But yeah, it's busy. The last 2.5 years have been really busy on the enforcement side. It's still busy. I don't know if it's going up that much more than it was. Like last year was a big year.
Would you say it's going up on the private side? Yeah.
It is a little bit, but I think it's just been high for about 2 years. I don't know that it's gone up.
It's just been
way
steady
up.
delinquencies is what.
Yeah.
It's not way more on the private side than.
But would you say it's
so,
because
and
of
I think-
defaults themselves or because of non-renewals?
I think
because,
it's the non-renewal.
like if you did a deal at 70 LTV,
Yeah.
market takes a 10% hit. Now you're at 80. You're like,
offside.
I'm not renewing this.
Yeah.
People are
And
tighter
we've been put in those positions too.
Their line of credits are at higher rates. Their credit card, everything's a little bit tighter for people. So are they able to make their monthly payments if they're getting a renewal even offered to them? Like it definitely is hot on the enforcement side. So it is what it is. I think it's, like we're not having a huge drop in real estate prices, which is big, right? Prices going up is the biggest
Saving
ease
grace.
for the market. Yeah, it
course.
really is,
Yeah.
right? You can do whatever garbage deals you want,
Yeah.
and if the market
gotta weigh
goes
out.
I like
up
how he points at me
10%,
and doesn't point at these guys.
Well, it's just my right hand moving.
Yeah, it's like garbage deals.
Yeah, well, you're out. You don't do garbage deals anymore. So
No,
don't
no,
worry. I
no.
can point at you all I want. But that saves a lot of people. And so we haven't had that for a few years, two years now. So it's been tight, but the market's kind of plateaued as, to my knowledge anyway. So I think as long as we don't have big drops from here, I think things will be probably busy on the enforcement side, but not anything to, stop lending on. But
I'd say
anyway.
the courts need to move a little quicker.
Well, that's the other big
have they
thing in
getting
this
tied
space
up?
is everything is slow. We've had the courts, and I don't want to get in too much trouble here.
No, we'll keep it- we'll
it's
keep it
mostly
super high.
lenders listening to this.
We'll
right?
keep it
So,
high level. Let's keep it high level.
I think the province, during COVID, they did a huge work from home mandate, and there's been talk of trying to, remove that and get people back into office, into courts, but it's really slowed things down. We hear a lot of things on the back end about how they've treated specifically mortgage enforcement litigation, and allowing, things get pushed maybe
Dragged
to the
out.
back and dragged out. And I don't know, I'm not in those meetings or anything, but we've heard this and we've seen it. And, they're changing court processes all the time, how they want documents submitted. The last 3-4 years, we've seen them trying to, reject things, it seems, for any reason possible. And sometimes it's contradictory things. You might have a court
Like
tell you,
siding with the
no, it'll be
consumer
more
more
like,
so
let's say
than
a lot of the crazy thing is a lot of the stuff is, it's boilerplate, easy stuff on undefended, like half the stuff is undefended, and you'll still get courts throwing it back and delaying it, even when it's undefended. So it'll be a template-ish process and document submissions. And what used to take a couple months to get something, wrapped up with a bow is now pushing out to 6-8 months. And you might have a court say, we're rejecting this. You got to resubmit it because we want it done this way. And the next week you do it that way, and they come back and say, well, we want it the way you did it the first time.
Before it was something like each courthouse had sort of particular procedures, let's say.
Yeah.
Minor stuff, nothing core to the claim itself. And now what's happening is, week to week, some of these courts are changing their own internal demands on these procedural issues.
Yeah.
I'm just glad Dave's handling it with Daniele and not me, because Dave's patience threshold is much higher.
Yeah. Well, you have to have a.
That's why he has to field my calls, and the courts would not take my calls.
As a point of example, it's really hard at times because you get so frustrated with the process, and we've got our, time is money ultimately with these things, especially if you're close to a loss position or you're creeping close.
Sure.
You get to these big pressure points where everyone is stressing to get things done yesterday. And rightly so and fairly so, and we get it, and we stress out about the same things. We don't ever want to see a lender have a loss. So
sounds like Dave needs to run for politics.
We've had deals though. So we've had files where the court is delaying something. And like one comes to mind, we brought like a quick motion. We just said, screw it. Let's just get before a judge and say, we were worried about X, Y, Z. There was some like side things. We were worried about actually the borrower was going to defraud somebody into giving them another mortgage if we didn't get that thing sold. And so we went to the court and we said, get us, the judgment, like this is ridiculous. Not only is our client getting prejudiced and going to have losses, but this is a shady actor who's going to, we're hearing through the grapevine, they're trying to get other mortgages and someone else is going to, there's no money in this property. And the court literally wrote us a 1-pager and said, you're trying to jump in front of the line. I think were almost the exact words of the court. They said something about moving up the line, and they refused us. And 2 weeks later, that borrower got another mortgage because they had a fraudulent agreement of purchase and sale showing a higher value. And that person lost, I don't know what it was, $200,000.
Oh,
there's a lot of I told you so's from the Carter campaign.
New business idea. Judgment Automator.
Auto judgment.
Auto judgment.
Yeah, I don't think that'll bode well. And maybe Florida, not Toronto.
My point on this was, we're in a position where we see these delays, it drives us nuts, and we can't harass them or do much about it because at some point we get blacklisted by the court staff where they're like, these guys are, they're trying to jump the queue or they're harassing us. So we have to be so political with this stuff. And we have certain contacts at most of the main courthouses that we know are reasonable people. And you really have, like, one of the big things now is fostering relationships and doing things where you're not upsetting people.
Keep me out of that courthouse.
Yeah. So it's not just the legal work anymore.
For sure. So you touched on the timeline there and gave us a great perspective. But can you, for people who may not know, for listeners who may not know, can you kind of walk us through the process from a high level? So say you got a borrower who's 60 days, 90 days past due, the lender decides to enforce. What does that process look like?
Yeah. So, I mean, there's sort of a general process that usually happens, but one of the big things that we try to do is, provide a lot of strategic advice at the beginning of a file on how to get these things out the door and the investor's money back quicker, because a lot of the times you don't have to follow the cookie cutter timelines. But normally, you have a default. The lender will typically take some steps on their own to try to, if it's just missing a payment, the lenders, most of them have a team that will reach out, try to, pressure to get the payment made. Maybe they work out a plan. There'll be some communication lender borrower directly before they involve lawyers. Some come right to us right off the bat and want us to do that, but mostly there's a couple months where they're trying to work with borrowers. You guys used to do the same thing.
Yeah,
Joe.
You have to.
You have to, and you don't want to piss off brokers by throwing lawyers in, and you got a couple $1,000s in costs, and they say, well, we were just away and here's the money.
Sure.
So there's a little bit of when do you involve the lawyers in there? And so they work with them a little bit. Once they realize they're not paying on their own, or you're past maturity and they're not signing a renewal, and you got issues there, you get it to the lawyers. And the normal process is maybe the lawyer does a demand letter, gives them a couple days, just you sort of scare them a little bit into, hey, this is serious. Somebody sees a lawyer letter, maybe that gets them to willingly play ball and bring it back in a good standing quicker before the costs start escalating on the legal side. So some of our clients like to do that, some don't. Some want us to go right into issuing a notice of sale and starting a claim for possession of the property. So you take those two steps. The notice of sale.
That's the first step, basically.
That's
legal
step.
First
if you're not doing the demand letter
demand,
and maybe a bankruptcy letter, you're doing just a notice of sale, which allows the lender to eventually sell the property. And the statement of claim is the initiating document to start a court action so you can eventually get possession of the property and sell it yourself. So I could dive down a huge hole of when do you actually need to go to court at any point. Every lender has the right to sell the asset that they've secured without ever stepping foot in court. The pressure point becomes, if you have a borrower staying in the property who won't give the lender the keys or access, are you really going to be able to sell it?
Yep.
Right? It's hard to sell them sight unseen. Does a buyer want to, in theory, even if the borrower's in the property, you could sell it to a buyer who would then evict the borrower themselves.
It's probably a messy
process.
But
nobody wants to do that.
This is something that...
But this is the kind of thing that lawyers, when you live in this space, you think about it right from the get-go. Are we going to need possession? Is it a vacant property? Are there tenants? Maybe we can work with the tenants are easier than we could a borrower. Is it a commercial property where we can just change the locks right away? Because if you can avoid court, my God, do you save time. Right? Now you're taking it from... I hate giving timelines nowadays because every time I give it's 6 to 8 months, it's a year or something, or 8 months to a year. So, but you shorten that timeline to maybe you can get this thing sold in 2-3 months, right?
Yeah,
So this is a lot easier. I was going to interject there and say what Dave's touching on here. It's really important that lenders work with a specialist law firm, because look, any lawyer can send out a notice of sale and statement of claim, 100%, no doubt, but when you run into the problems and you need to consider strategy, you need a specialist firm with an infrastructure dedicated to this. So, and the other part of it too is that it's I think sometimes finding that middle is also really good, because if you go to the really big firms, they kind of have a machine that's too big where you might not get their best lawyers to give you the tailored
or the
advice.
personal touch.
Yeah, well, but you want the personal touch from the
when
the
we
best
have issues,
minds.
I pick up the phone, I call Dave, and Dave's right there,
and that's
and he's dealing, he's updating me, and we even built a process with you guys about that as well,
100%.
which has been amazing.
It's that initial strategy of actually thinking about each file, because it's not just you do 1,000 of these, then it's very easy for it to fall into just do every step, start the court action.
Yeah,
we have people all the time coming to us and saying, where's the court order for possession of the property on a vacant property where the lenders change the locks? And a lot of people and big firms go for, they wait 6 months to get an order for possession when they didn't need it.
To Daniele's point, I mean, any lawyer could send out a demand letter, but I think to you guys' point, the strategy piece is critical and what sets you guys apart in the private space.
100%. And I think it's
It's been a work in progress.
It's like boutique, I think, is another way to look at it. Again, because I was hitting on that idea of at some point in their growth, firms become like institutions, and you don't get the people who built this thing up. And we're at that stage where we're a large firm who does a high volume, but
I think
you're still going to get
one of the other nice things because we do high volume of the transactions initially, we work with the lenders there, and then we also see the enforcement side. We kind of put all those pieces of the puzzle. So we see the end game of what happens when things go wrong, which is what you absolutely need when you're creating and structuring the underlying documents to a transaction and the lender's security documents. Because we're constantly revamping, and I'll send you an email once a year where I'm like, look, we got to update your commitments. And that's a nice thing, because I think you guys give that to all your mortgage
it's actually, I was about to say, it's funny because we do.
I'm pretty sure a pretty big chunk of the clients.
The most up-to-date potential commitments in Ontario
I would say that term sheet's probably circulating within at least 50 to 60 companies.
It was really, really
We've
funny.
adapted it to Atlantic Canada. So.
I'm sure you made some tweaks, but
actually, Dave drafted most of our
but I like that stuff too.
So.
I mean, it's especially in real estate, a lot of it's kind of cookie cutter and the same thing over and over. It is what it is. So, I kind of enjoy when we get a chance to look at new hard cases and everyone thinks something, and we're like, well, maybe, but what if we do things initially this way? Can we get around? So we've kind of done that with, off the top of my head, the auto renewal stuff we've talked about many times. Anyway, there's a few of them that are big. The auto renewal one's big, and getting some sort of administrative underlying cost back for lenders once mortgages are involved. That's been a constant,
it's very tricky. It's constantly changing
point for since we started, really.
Yeah.
It's actually, I was just thinking about something funny.
Okay.
So it's one of the great things in our firm is having Dave, because he's dedicated a lot of his time to becoming sort of a leading academic. in the enforcement world. He runs the CLEs for lawyers. That's their continuing learning. So he's basically, at the forefront of research, has all the contacts in that space to get
Law
the best
professor.
and most recent information. He's a law professor. And we had this amazing situation. I think it was on your file, was it not? Where, so one day we had to argue one side of an issue. What was it? Do you remember?
I remember this deal.
It was something to do with
it
the
was about
payout?
it was about the
Something
penalty.
being contested
Dave was
on a
saying,
penalty and a
Dave
payout?
was arguing that the penalty was enforceable, a 3-month penalty. And then he calls and goes, just so you know, that same argument that I just got us the penalty on, I just argued the opposite end and I got it waived.
Same day.
So we was like,
Wow,
wow,
you are the worst.
Goddamn 3 months.
But even better is when someone called us on some issue. I can't remember specifically what the issue was.
It was
And
Bruno's
they were
deal.
quoting an article from a David Carter trying to argue with us about it. And then Dave got on the phone and he was like, no.
And he squashed his
you're
own
misunderstanding what I wrote here.
It is
Because
a funny story.
This is a little different because of this, and that. And the other guy just buckled and gave us
So
basically
it was
what we
actually
wanted.
He
a
turtled.
borrower called a lawyer or called our client directly, and their lawyer called them directly and said, "I've got this article from this professor David Carter that says you can't do this," and our client got turned and said, "Well, my lawyer is David Carter."
That's hard.
That's so funny.
That's such a good story.
That's awesome.
Great. Yeah.
Before we shift gears, we have like our next question I want to ask you guys. This is something I want to go back a step. With rates down, this is where my mind's always going. What's like keeping this market from being saved? So in Atlantic Canada right now, we're being saved, I'll say. As soon as rates came down, we went straight back to price growth and like insane demand. What would you say is the difference in Ontario that you're seeing? I know we talked about like
fear of Trump.
Literally?
I seriously think that's a
recession,
big part of it.
which
Yeah,
is-
fear of
comes from
recession.
Trump.
Yeah.
Yeah, that and I think rates are still high. Like our market hasn't, I don't think, at least, maybe the condo is different, but like it hasn't dropped enough that it's still really affordable to be buying and building. Like, so that market's really expensive still.
Like,
And-
yeah.
I
Like
also
bank
think you guys experienced something where
on the bank
where
rate side.
with all this inflation and all this sort of social upheaval, I think tell me if I'm wrong, I remember reading something a while ago about people moving out east.
Yep.
Yeah.
So I think you guys are almost experiencing maybe a surge because of an actual social sort of change, whereas we haven't had a social change in the positive like you have. We've got the exact, maybe even worse social circumstances right now. And like Dave said, I don't think they've dropped enough, and I think there's still anxiety.
Yeah, the mentality is still it's
politics.
expensive, and there's fear about
Uncertainty.
like it's not. There's nobody sitting here thinking that I talk to that hey, the market's about you're at the bottom and it's about to boom.
Yes.
There's a lot of talk about it being around the bottom, but that everyone is talking
I would
about
agree with
3
that.
to 5 years of it being
like stagflation.
stagflation. Yeah, just stuck.
I think people are really this is where I think it is because I'm sitting around waiting to maybe do something, and I think what's happening now is people can buy, but they're picking their spots. Because what I've seen from my personal experience, very anecdotal, but it's like unique, interesting properties are still going and going for good money. I've seen it in
Well, we look
Etobicoke
at
where I live and
Etobicoke
where
a lot,
we
yeah.
follow Etobicoke. But even in the condos, if you talk to condo guys, they'll tell you the same thing.
The premium
where
condos.
The premium
They're still
condos,
going.
it's these 520 square
The
foot
cutters.
Yeah.
cookie cutter,
Yeah.
those
Which,
things.
by the way, like these builders paid a lot for the land. Their construction costs skyrocketed during COVID. Don't forget, like when you're building condos, not a house,
Mhm.
you don't foresee that your construction costs are going to double
Yeah.
overnight.
And you're not going to
and-
achieve the rents that you expected
Yeah,
either.
exactly. Like like these condo projects take 10 years, maybe longer to develop from beginning to actually closing out the deal.
Yeah.
And so they're obviously selling at these in like $1,500 a foot.
Mhm.
And then appraisals are coming back at $1,100 a foot. And then you've got a $250,000 deposit on this property. So now you're like, one way or another, I'm losing $250,000, whether I close or I walk away and then be threatened to be sued by the builder. I might as well just try to close, hold on for dear life, collect some rent, and then like one day, because real estate always goes up, I'm gonna make my way out of this mess.
But to get to stick to what Ryan was saying is I just think people are patient. That's my interpretation. Is people are patient right now. I think if we saw we saw some confidence.
More patient.
In the
Like,
economy.
we have the
2 to
lowest
5 years ago.
sales like historically. Like
That's, I mean, the numbers are insane.
if you looked at the numbers,
But
they're
I just think people are
40% or whatever.
So I think we just have this cultural mentality here where it was And I
Real estate never
always
goes
found it
down.
hilarious. It was you buy a property, you're
lose.
banking 150K, 200K a year. You know, that was the way it was for 15 years? You just made money by owning.
You couldn't lose in real estate in
assets.
the
It was
last 20
crazy.
years.
I think that mentality has finally evaporated because it's not a logical mentality. You can't assume properties are going to go up 15% a year. You can't structure your deals on the assumption that properties are going to go up 15% a year. Yeah. So I think that's sort of been removed now. And it's like, if you ever study economics, one of the arguments that a lot of these classes make, you'll hear professors make, is buying property is not necessarily an ideal financial strategy. You can rent and then do this with your capital, et cetera, et cetera. I've always disagreed with that. I believe in investing in real estate, but I think the market is starting to act that way. They're saying, you know what, I can rent four grand, depends what it is. If it's a house, $4,000 to $5,000. If it's a condo, you know, $2,500 to $3,500. Sit around, wait for opportunities. I'm only going to do it if it really makes sense. I'm not going to do it under this assumption that I'm making money, you know, every 10 months, you know? So I think that's my interpretation
That's actually
of it.
a really interesting
But-
thought just came to my head.
But to your
Joe.
point, like based on what's been happening, there's been a pivotal change in the private space. Whereas before, you could lend at those 80-85% levels, collect insane returns.
Feel
The
confident.
next year, your 85s to 75. So you're like a genius, right?
Mhm.
And then if you continue with that thought process in the last few years, you pretty much lost all your money.
Mhm.
And that's why you're noticing the rates are actually in Ontario specifically. You are seeing a massive discrepancy between what the banks are charging
Mhm.
and what privates are charging. So, for example, back in the day when COVID came, interest rates were like prime was 2%. There was a 400 basis point delta between privates and banks. So privates were charging 599, 649, and that seemed egregiously low for the time. But if you think about it, their borrowing base or cost was 2%. GICs were paying 1%. So like, yeah, I'll make 6.5 points. Then rates skyrocket. They go to 6+%. So privates obviously firsts are like
10.
899, 999, seconds are 12, obviously East Coast even higher. But now you've got privates, like the larger ones, they're offering 599 and 1.
Mhm.
But
Yeah.
delta's tiny.
Scotia Bank
Yeah.
posted is 5.25.
Yeah.
Equitable's charging 5.5 and a 1% fee.
Yeah.
So you've
Converge.
got, like, I talk to a lot of my clients, and it's like they have massive liquidity. There's tons of money available to go out, so they're just trying to get out because
But they must have very specific box to fit that kind of
they
rate,
do.
right?
Because if they're getting leverage, for example, you've got like the bank's not going to let you just write 85%
Sure.
You
nonsense.
should get
100%.
more of that bank.
But if they're
business,
trying to
though,
do that
right?
65,
they should be getting more of the bank business because there's no more delta. Like the delta's gone. So why would
People
you go to
are
a
actually
bank
people
when you can go
are-
to a private for
people
1%
are
more?
going to
well,
privates.
people will move for a quarter point is the truth of it. But people who need fast money without questions, they're all
flexibility.
day going to be running there.
For sure.
But the
100%.
difference was you had a 300 to 400 basis point difference, and like you just always fluctuate with that. When prime was 6, rates were 10. Now you
Yeah.
have prime at 4, rates at 5.5. We've never I've been in the business for 20 years.
It's funny
I've
too
never
because
seen anything like this.
It's
in my
also
life.
in a time when delinquencies are the highest they've ever been, which kind of sounds counterintuitive, but we are talking about a very specific box of money. This is not the market at large. This is in my anyway.
Well,
I might be wrong on
there's
this, but that would
the
be
lowest amount of sales historically. So you've got the most privates ever, right? The industry's grown. You've got like the hybrid institutionals who, ask for a little bit more documentation, but they've got the lowest rates. You've got like the mom and pop shops. You've got like the mix, the mid-tier mix, and then you've got like just random syndicated investors. And the issue is those syndicated investors can't compete in that space anymore. No one's putting up money at 6%.
No.
I'd rather not put my
Yeah,
money out at 6
100%. The
points.
syndicate investors died in COVID. It made no sense. People were like,
and now syndicated investors who are used to 10%, 9% returns, like they got to write some really shaky deals.
Yeah.
Like
this is the professionalization.
our
of the
business
private
used to
space,
be,
though.
I think, let's call it 80% syndicated, maybe more.
now it's all mixed.
Now all we do is MIC business.
Yeah,
All
syndicated
of
is
our mortgages.
the
are
private
the
industry.
syndicated
has
space as we know it could
Yeah.
slowly be dying.
So these boys that you said are sitting on a ton of dry powder, they can't get their money out.
Right.
There's also this industry of like, there's a ton of people that are non-renewal. Like what's their forward path?
that's the issue,
They're not
right?
making any return on their money.
They wrote
then.
a deal at 70% loan to value.
Yeah, they're upside down now.
Now they're 80 plus.
Yeah.
At like 7%.
Mhm.
So like, do I keep collecting 7% money at 80 LTV, which is insane? Do I call my money back, which triggers a power sale in a down market? Like, what do I do?
Still taking a loss.
Do I just take the haircut because I'm a fund? So like, as long as it performs,
but you don't
like,
have applications.
But then you're also not making money off of your
that's
money.
the issue.
Like,
Now
it's
the
yeah, what do they
applications,
do?
I see it, right? Like I see like what's being submitted like across the country, and it's like statistically down 40%. Every client I speak to is down significantly in volume.
So what's the mindset? How are they going to manage it? Like, where's that go?
I think this is like a purge. I think like you're going to see guys check out of the space because like if their cost of capital isn't cheap enough, they've got to write the hairy stuff. So nobody wants to write hairy stuff in a bad market. Like that's a recipe for losing money. And then you've got a lot of the larger mix that are like $500 million plus. They've got these insane line of credits that they've like built up. You know, they built these rapports with banks.
They've
These
built the
banks have
opportunity.
given these massive lines. They've never had an issue, and all of a sudden, like there's a race to the bottom. Like I've never seen a 1% difference between a bank and a private.
Well, which is why Mortgage Automator becomes more and more important, because when you're not making as much money, you want to
You
keep
need
your
efficiencies,
infrastructure in
for
place,
sure.
and you need efficiencies.
There's that advertising. Thanks,
Right.
man.
There you go.
Well done.
Thanks,
well
my
done.
boy.
Nice.
Title.
Nice little bow.
Nicely done.
Right? Just lay up for that.
Guys, great discussion. Let's pivot. One of the big reasons we came here today was to talk about Lawyer Automator. So we two are kind of converging here. So I want to get both your perspectives, but Joe, kick us off. Tell us what Lawyer Automator is and why it's going to make a difference in the market.
Well, I appreciate that. So Lawyer Automator is a full-fledged conveyancing platform. It's going to be the only product that's fully connected via Automator link into Mortgage Automator. So now privates, the same way a broker, this was my logic. So just a quick backstory on this. We covered the broker in the lending market. We connected to all the Biologics of the world, the Velocities, the Bosses, Lendesk, Scarlet. We connect to everybody. Brokers can submit to on any platform into Mortgage Automator. So you can pick up a deal. I can pick up a deal. The problem is once it went to a lawyer, you're in the dark. It's not digital. The lawyers have to rekey everything. And then, we talked about it. How much time did we save by being able to, back in the day, drag and drop an app? Now it's a digital submission. That logic sort of like went forward. And I had conversations with a bunch of conveyancing platforms. They didn't feel there was value. It was borderline insulting, like sort of like the way they looked at it and what they felt that we should be compensated for providing that data feed to them. Whereas I know the value of what Biologics or Velocity or Lendesk brings to the table. And so when I was talking to these guys, I said, what if, because now, back then it was just one client, like we were just one of the smaller customers. Now these guys are dealing with the biggest mix. They're dealing with a ton of amazing privates in the space. All my customers, majority of them are my customers. I said, what if I could literally create the same efficiency I did for my lenders to you guys? And they were like, I'm listening. Because they do specialize specifically in a lot of that private business. I said, we could literally push 98% of the data right into your system and you can get deals out in 10 minutes. Not only were you already the fastest guys in the space, but now like it's going to be next level fast. And so we hooked into FCT. We have an amazing partnership with them. And essentially we can now obtain title insurance right through our system. So again, what you guys don't know is in the private space, a lot of delays happening with title insurance, right? You guys are aware of it. And so by having the full circle from broker to Mortgage Automator to Lawyer Automator, like we are thinking about that process and creating the efficiencies to allow for essentially that speediness. And so we worked very closely with Dave and Daniele and Laura, who was like the head clerk on helping putting all that together. They consulted for us. We brought them in and we said, like, explain every possible pain point you have in the space. And I want to do the exact same thing I did with Mortgage Automator, which is like, we're going to create the best kick-ass, conveyancing system there is. We're going to think about it from a lawyer's pain point perspective. And we are hooked into LLC, which is FCT's product, which allows banks to instruct as well. So it's not strictly a private product. You can do the full gauntlet of products, of legal conveyancing.
That's great.
So basically, This is just another argument for some equity for us. No, all kidding aside, it's all of our years of experience together was kind of synthesized into this product, and
100%.
It's gonna make things a lot easier for a lot of law firms out there because this is an amazing product. And you're probably asking yourself, why would Grechi Carter help other law firms get better through Mortgage Automator? But at the end of the day, this is gonna help with the process, but our expertise is still what it is, and we have a very specific infrastructure built for mortgages and all of that. So we were happy to sort of, participate in this process. And it's going to be a real game changer for a lot of law firms.
I agree. I think the most important part, I would say, was like the lack of communication that law firms provided. Now, with Grechi Carter, like we had that communication, but it was like the clerks have to respond via email. What we've done is like the same triggers that we use in MA for like as the file goes through the statuses, the brokers will get notifications in real time as to when Grechi picked up the deal, which clerk is assigned to the file, when it was sent to the ILR, which ILR is it, when the borrower signed with ILR. So now as that ILR is updating Grechi's office, I'm getting notified in real time without their clerks having to send us an update because they could be busy. So the systems are doing all that, which means I can start preparing my money because in a 24-hour rush deal, I need to know the moment that guy signed.
Yeah.
Oh, I know I've got title insurance.
That's huge. I think the biggest frustration we have from our brokers is delays at the lawyer and the frustration going back and forth, lack of communication, finger pointing.
The beautiful blame game of real estate.
Absolutely.
But we've even taken that out of the equation.
You get to a closing day and, the way it usually works is the lawyers just tell the lender it's ready to close or not. We're good or we're not.
Yeah.
Right.
And then getting those emails.
Yeah. Right. It's good to go. It's not good to go. We're waiting on docs is a classic one. Right. So we've got we basically
sounds like you said a few of these things before.
Well, what we've tried to do is to have clear lists of here's actually what's outstanding and here's why it's important. And if we need to get on a call because we might waive something, we get on a call. Right. But that goes from usually the clerk or the lawyer to the lender. And then the lender has to send it to the broker. And then eventually, and then there's broken telephone. And the other lawyer, the borrower's lawyer is saying, well, we sent everything. And they're saying this stuff's missing.
What we're going to like is it's going to eliminate the blame. When they're saying we didn't send things out.
Full
Emails right here.
The broker in real time will see documents submitted, but the lender's lawyers plugs in, insurance is missing. Hey, broker doesn't need to ask for updates. A minute after the lawyers reviewed these things, they can go out and get the insurance binder.
So that was actually...
They can move it. They don't have to wait and get the borrower to do it.
Sure.
Right? Everybody sees it.
Thank you for bringing it up.
Awesome.
So there is a real-time feed with the documents where as we can actually, when we push the deal to the other side, to the lawyer's actually picking up all of our supporting docs, the tax bill, the term sheet, the lawyer's instructions, any supporting documents. But the lawyers can do the opposite as well. Like they can essentially start adding, because we create all the conditions that they require, that we need. So there's your home fire insurance, there's your title policy, there's your charge docs, there's your ID, there's your stat deck or your assignment of rents, whatever you need on that deal, they're itemized. So we actually can see, clerk just did this. Oh, clerk just did this. Oh, on this file.
Do you think there ever becomes a world where the borrower has exposure to the document flow?
Yes. We're actually launching borrower portals as well, so we can actually limit what they can see. And so
it'd be good for insurances. Instead of it having to it has to go from the lawyer being where's the insurance, and it goes back to the mortgage and then back to the broker and back exactly. Just I get an email being upload your insurance.
Potentially piss off some brokers that way.
This is my only thing is
I don't know how
again,
it is
I'm going to allow lenders and their lawyers to decide. We're going to give them the flexibility of choosing how much or how little.
If you want to use
correct.
It.
Sure.
The other most important thing that we
don't forget, it is important that things come through a lawyer because that gives it some level of safeguard. If a lawyer is providing us with something fraudulent, theoretically, maybe we can go back to them for, representing that this was a valid document.
I think it's more so.
That.
I agree. I think it's more so visibility for the board to know where the transaction is, not to harass the broker, who then harasses the lender, who then harasses
the lawyer, right? The borrower's lawyer might not.
So it's hey, this is what's outstanding,
right? So
So how do lawyers sign up for this? And can you talk? I don't know if you want to get into costing or not, but just
the cost.
On that.
Lawyers can reach out. It's on a transactional basis, similar to how the industry is today.
Sure.
Lawyers can reach out to myself, Joseph at Mortgage Automator. We're more happy to do a full demo of the product.
Yep.
That's basically it.
And it's live. It's ready to go.
Yeah, it's ready to go. We have law firms using it today, so
Fantastic.
we're very excited. The one really cool feature that we're going to launch that I do want to talk about, I think this is the game changer, is when a clerk is assigned to a file, you'll be able to actually chat with that clerk through the system because it's through Automator Link. So for the first time ever, the clerks will be like, hey, we're going to get this policy soon, like get ready to fund. You don't need these nonsense formal emails. You can literally have
That'd be nice.
queues. And then if a clerk is sick, a clerk can be reassigned and be like, Laura's not here anymore. Erica's going to take the file over. I now know, like, Erica's dealing with the deal, and I can chat with Erica right through the system.
Comes back to that web-based platform where everybody has visibility to it.
Yeah, that's kind of like how we looked at it, because we had, when I was in the office, I could harass their staff. Now I got thrown out. So the only way is like
everything we have done since has been to eliminate lenders like Joe harassing our staff.
And harassment is just the picture.
He's this man in the office. That's awesome.
14 espressos.
So we're running a little long, guys, but maybe, Neal, we do one more before we get into the bonus round here?
Yeah, let's do it. Okay. So there's a nice formalized question here, and it's basically titled Future-Proofing Private Lending. But from everyone's perspective, what do you think on the regulatory space or technological space is going to change that will dramatically impact private lending? And as a private lender, what should we be doing to ensure that our business remains stable? Because to your point, you guys just alluded, like right now, there's people that are going to get squeezed out because they just simply can't get their capital out. They can't make a return on money. Opportunities aren't there, or they might be upside down on a ton of deals. And we are even seeing that in Atlantic, where there's privates now that are extremely upside down on deals, and they're going to get hit pretty hard. A lot of them are quite large and be able to stomach it. But where do you see the space going, and how do we prepare for that?
You want to go, or do you want me to go?
To you.
I can't think of a specific regulation per se. I don't know if you guys can, but when I think about it, I think about who before this, we said we didn't want to go this way political, but I think it's what is Carney? Is he going to run this place like a banker, conservative banker would, or is he going to run this place like a free spender? And so it's really, I think it's a question of, are we going to get that consumer confidence back? Are we going to run this economy correctly? And are we going to bring these markets back to life? Because I think everybody in this industry is just dying for it to boom again, because those days were fun.
I'm going to choose to refrain from commenting on that.
I'm steering it away from politics. I don't know if this exactly answers, because I don't think it's specific to regulation, but I would expect to see a continuing consolidation in the space. And you're going to see less and less players and bigger players, because they'll be able to offer more competitive rates.
Yep.
And they're going to have the softwares and the wherewithal and the efficiencies to do things, but just like banks, but at slightly higher rates and without all the qualifications.
Don't you think that that's what's happened, and it has allowed the space for privates to establish themselves? Because it was like, as they get bigger, they lose those efficiencies.
Yeah, to some extent, but a lot of that efficiency is just starting, right? We're just starting to see it on the tech side. The tech side's where they're really going to get efficient, and if they don't, they're gonna die.
I would agree. I think like the last 5 years, like you've seen like
professionalized. It's consolidated and professionalized.
You've seen like the space get a lot of more.
Well, I know some of our lenders. I've seen them cut their staff in half, literally.
Please don't say that.
I'm not gonna mention.
We're here to
names,
empower customers to scale their business with their current staff. Just want to be clear on that. What I would say is you're going to see adaptation of different products. Whereas if you were cherry picking strictly single family, and you were strictly doing firsts, maybe low loan to value seconds, you're going to be open to doing construction, commercial. If you want to either receive higher returns on your investments, or just if you want your phone to ring, you got to kind of start thinking outside the box. I think you're going to get people to be more creative in the product offerings they're bringing to the table. And again, it's the typical evolution of anything. You're just going to see, like you said, the consolidation, and then you're going to see guys go a whole different direction. There is more regulation in the market than ever. Like, FinTrack came in. They want IDVs on everybody. They want bank verification. Like, that's not what privates used to do. It's like heartbeat, SIN number, appraisal, let's go. It's definitely changing. There's more AML stuff that's being involved. So we're not laundering money, anti-fraud stuff. A lot more accountability. And the perpetrators are getting thrown out of the space. You can't do the same stuff that you used to be able to do because the bank industry already has like scar tissue from all that nonsense.
That's a whole different topic.
Yeah.
Though. It's super interesting to be in real estate and actually see how the fraudsters adapt because they are good, man.
Yeah,
They
you get a
are
lot of phone
good.
calls. Oh, my deal just died at RBC like literally a day ago. And by the way, I was told, I'm not going to say who told me, but what they're doing now is they'll catch the file way ahead of time. So they'll know the guy's a fraudster way into the purchase transaction, but because it's a 90-day close, they sit tight. And then what they do is the
They
day of
blow it up
closing,
right
they're
before.
like, oh, fraud, we're not doing the deal. All the best to you.
Yeah,
Just to prove a point.
thank you because you've wasted all the lawyers' times and and all the brokers' time and all the lenders'
And it
time.
causes a lot, and you get a lot of phone calls from brokers saying, my deal just died at RBC. Really? Like a 90-day closing, dying the day of closing? Like, why weren't you condition complete? Oh, something came up. What came up? I just can't write the deal last minute, you know? Yeah, okay. So like down payment verification was fraudulent. Income was fraudulent. Something was fraudulent. And again, if you're just transparent with the private on day one saying like, hey, this guy's not qualifying. Like income's not there. Or it's like the guy's 7 jobs. Whatever the case is, like privates will do it.
It's a good point, though. And in some ways, whatever bank did that is kind of saving the next guy in line because it presents a red flag.
Sure.
I didn't think about it.
Yeah,
like
and
that.
the banks are definitely aligning. Like there is they don't talk about it, but I'm aware of it, that they're talking together and they're intentionally doing this to not let people.
Well,
the problem is they screw the sellers.
You have to do
Right?
this through tech.
Someone else gets burnt along the line.
And just to be clear, it's not intentional. Like they're not doing it fraud for profit. This is fraud for shelter. They're doing it because like they can afford the payments. They're just not showing the income because the banks have made it so difficult. But like they can clearly make the payments because defaults are still quite low up until like this renewal thing. But like historically, given how much fraud's been in the space, like the system sadly works because people have prioritized, mostly in Canada actually, like most of their money goes to paying their debt and their mortgage. Like it's their priority.
I fully agree with you. There's so much to unpack there, and I want to pick you on that. But again, we're getting to the end of it for time. I guess, would there be anything specific you would say, and I'm asking selfishly as we're newer into the space, what would you recommend? So is it stay focused on the technology that's coming out and try to be on the forefront of that? I think we are in a slightly less competitive marketplace in Ontario for the privates. But is there anything else you would say, like looking at us like, okay, this is something you guys should be doing?
I mean,
to
the
try and improve?
software being efficient and fast is probably the biggest thing.
Yeah.
You have to be so fast because if you're not fast, the brokers, they just go elsewhere. And you got to be in front of brokers all the time.
Yep.
Right? First, you got to be in front of them, in their mind. Your name has to come up. You don't have to have a huge fund for brokers to see you all the time. If you're out at events and you're talking to people, you've got, you're content, stuff like that.
I was going to say the content.
Dave, I love it.
I would
the
say
content side's important too,
Build a brand.
right? I mean, like we talked about
get
doing
in front of,
this.
It's actually
you figure out your
funny.
own way to get in front of brokers, right?
It's funny
it's still a
because-
relationship game for the most part. Brokers aren't submitting deals on, online to 100, maybe they're
Spray and pray?
Yeah, spray and pray. But like for the most part, the good quality deals are relationship based.
Yeah.
So you got to get out there.
Yeah, no, they like, listen, you can get as efficient as you want, but if you're not building the business, then it doesn't matter how efficient you are. You don't have the deals. So that's actually something we exactly went through. When rates first skyrocketed, I actually noticed that the amount of privates we were funding at its worst point dropped by like 60%. And obviously that was a major hit for our company. But, instead of just trying to cut staff and, just sort of feeling sorry for ourselves, we leveled up and we did a whole bunch of videos on LinkedIn. I don't know if any of you have seen that.
Fantastic.
I think Joe was actually in one of them. This is more life advice, not like technical business advice, but take the slow times as a chance to
regroup,
become stronger, to
an
become better, to do
Totally.
things you weren't doing. Don't just sit around hoping for the market to get, to come back.
Yeah,
Put yourself out there.
I would say I commend these guys because I've seen their growth from like when we started, where they were sharing like one office downtown to like the firm they've built today.
Mm-hmm.
And I can tell you that relationships with these guys, like lifelong friends with them for 15 years now. One thing they've done phenomenally well is like he said, not cutting staff during difficult times, because then
Always keep your best people. We
you
always
keep your
have.
best people, but like they just double down on relationships. Doesn't hurt when you have a membership at St. George's Golf and Country Club. So if you guys ever want to play a very exclusive course, reach out to Neal and Dave. But
yeah.
I would say like that has been my main focus too. Like relationships has always done right by me.
Yeah.
You know what? That's
great.
what's fun about this business. Like the truth for us is we're very close to every single one of our clients.
Yeah.
Very close. Like we see them, I don't know. I don't want to give an exact time, but we see them all the time. We're in each other's lives. We golf together. We dinner together. We lunch together.
Seeing
we
us
hang
shank
out.
golf balls all over the place.
They get to see us at our emotional worst when we can't hit a golf ball. So
I've been there for a lot of that.
character.
Yeah, no, very, very well said, D. I mean, I think, building those relationships, it's fun, like you said. That's one part I absolutely love about this business is it's built on relationships, and if you put the time in to do that, then chances are good things are going to happen. So. Great discussion, guys. That was awesome. Let's wrap up with a couple bonuses here. So,
Bonus time.
my guy, Dave and I talked before we went on the air. We're going to start a Toronto Maple Leafs podcast. So please tune in for that. So let's start it right now. So I think last time we were here, I don't know, 8 or 9 months ago, we were talking about what the Marner extension looked like, how the Leafs are going to do this year. Well,
what did we say? Did we think they were extending him, or what did we?
I think so. I think that we said they had to at the time, but they tried to. Obviously, didn't work out. Another lost year. Here we are, probably losing Marner. So, what do you want to talk about? Where he's going? Or, did you? Yeah, okay.
Did you talk to him?
Was
about
it the day after Game 7 or what?
I just told him make sure you sign with the Leafs for an undervalued deal.
I don't think he cares.
No, it's shocking.
So I assume your perspective is that it's time to separate and or where do you want to go with that, Dave?
I can see he's tearing up a little bit, guys.
I wouldn't give
I am sad about it, man. I was a Marner fan too. It's tough to see how it's gone.
I don't know. I mean, just pure Leaf fan hat on. I love their goaltending, love their defense. Actually, the forwards are pretty good. I'll buy the Matthew is injured and will be better next year. Of course, I think if you don't buy that, they're screwed anyway. Right? They're not doing much if he's the same thing he was this year.
Hedges on him.
So, it felt like we didn't have a true superstar this playoffs. Like,
they lost. I think
it's
the
felt like that
goalie
in a lot of years.
I don't think the goalie was the issue. It didn't feel like they had.
But they've got there's a lot of cap space the next few years. Would I hate them? I wouldn't hate them signing Marner personally. I think they probably need a couple more top end.
But I think the question is it 12 for Marner, 13 for Marner?
But I just don't think he's going to sign.
Right. But this is the point, though. The question is, what's a better way to build your team? Is it 12 or 13 for Marner, or I don't know what Marchand's going to cost, 8 for him, and then 5 on someone else? Like, what's going to build a better Leafs team?
I'm leaning more that way. What's that?
Is Marchand unrestricted this year after Florida?
He is. But he's like 37 too, right?
He'll probably sign with Florida and just stay
think
there.
he should be a target of theirs.
But we're built to win now, so that's fine. We only need 1 or 2 years from him, And
I agree.
We don't have that kind of guy. Florida only has that kind of guy. They don't have one Matthews or Marner. And when Marner goes to Florida, if he does, he's going to be an absolute monster. Let's say, because you put him in that ecosystem, I think he becomes something else. I think the problem is we have kind of three guys who aren't that kind of guy.
I don't think there's any chance he goes to Florida.
But if he did,
it'd break his heart.
I mean, for sure. I don't think they don't have cap space. They're going to sign. They've got their own guys to sign. He doesn't really fit the kind of system that they play.
Yeah.
Dump, hit, grind guys down. He does not play that game. He's not going to sign.
But I think it would fit nicely just to have that little bit of. He does have that magic once in a while. The problem is,
he'll be good for any team, but it's just, is he going to perform?
No,
in the playoffs?
Not for our team. That's my issue. I think he'd be unbelievable in a team that has
like Hyman?
All the sort of other support you need, which we're a little bit lacking.
For sure.
So we asked about this idea of this is the Leafs sort of. The mentality they had the last 10 years was spend on your couple big guys and fill in the blanks with whatever value you can find. And the theory behind that is that the high value guys are statistically more likely to perform at those value
So the 12 million
deals,
guys produce at 18,
whereas
whereas the 5 million guys produce at 3 to 6.
And you might get value on them, but but statistically, there's a lot more risk.
I'm
a lot of those
guy.
become horrible contracts.
You're what?
I'm a value guy.
A value guy?
Joe's building his whole team on $2.5 million players.
So Danielle,
how excited was I when they got who's this?
Joe's got 4 third lines.
We don't talk as much about the Raptors on this podcast, but quickly, I just want to get your perspective. Is Giannis coming to Toronto this summer?
I mean, if I had to bet, I would guess no. I think we should do everything we can to try and land him.
How old is he? Is he like early mid 30s?
31 now.
Okay. Oh, so
I
still
think he's
got
30
some years
going
left.
on to 31.
Okay.
4 years.
Okay.
I mean, I think we should go for him. And then the next question becomes, can you keep Scotty and still get him? Is there any way? I've seen some packages floated on different websites where basically we're giving, I think it was Barrett and like all of our picks and Grady for Giannis. I mean, if you can do something like that, then you've got a team left with Quickly, Ingram. You've got the Shed, you've got the Mogbo pieces, you've got, some other pieces you hope to develop. And I think if you can do that, you have to, because then, like Dave was saying, you got to find a way to fill in the blanks. Because if you can, then you have a team that can legitimately win the East. The East is super weak right now.
Okay. So you're optimistic?
That will get them?
No, sorry, optimistic about the future of the Raps.
Oh, so if we don't get Giannis, that's a different question. I think they're fun. I think this is something like a 45-win team. Could be a little better depending on the way pieces develop. Like, the big hope was that we would get a huge draft pick this year and then nail a true superstar, because if you add a superstar to what we have, then maybe you could be talking contention.
Mm-hmm.
But the problem is these guys played way too well this season, even though they only had, a small amount of wins, but it was well enough to play themselves out of the top 4.
Like random guys coming up and playing amazing too. Like,
yeah, I mean, there was some of that.
And,
Barrett was a monster on a lot of these closing games. Pirtle was out of his mind for 2 months. So anyway, if this 9th pick hits, it can, right? Like Giannis was drafted 17th, I think. Jokic 32nd, which is nuts. Like, can you pull that off? Then yeah, you're competing.
Right. You think
if
they make that pick or they trade it?
Well, they're trying to trade it for. There's even Durant rumors. So
I heard there's like a double deal.
I don't like the Durant idea. I think he only has a year or 2 left.
So the last 2 weeks, I've been trying to convince Daniele to do a combo bet on the Raptors winning the chip. I think it's like 150, 200 to 1.
I don't think they win.
Like,
but I don't think
light on fire.
Well, if they get Giannis, if you think there's a 20% chance they get Giannis, are they not?
No, they're not winning the chip with Giannis.
Like,
OKC's too good. San Antonio's too good.
Right.
There's already rumors that Durant's going to San Antonio. If that happens, there's 2 monsters in the West. Like, anyway, the point is, there is a path to become the team that can win the East.
Noted. Okay. All right. Anything else, guys? We all good? Joe, you want anything else to wrap up here?
No, it's been amazing. It was really
your Florida team?
Yeah. Who's winning the cup,
Which
Joe?
one is it, Tampa or Florida?
The Panthers.
Panthers at 5?
100%.
But if Florida was here, it would be Tampa.
Actually, I want to make a call. Like the Canadian Open just happened.
Yeah.
It was a phenomenal event. U.S. Open's happening, and guys are already complaining about the rough
conditions in the rough.
Yeah.
I saw.
Colin, Bryce, guys are like tweeting that like it's going to be a beating.
Somebody said they think the winning score will be like a +4.
Yeah, they're saying. So I watch a lot of YouTube golf, and a lot of these scratch golfers who go out to play, like Brian Bros, who are like guys who played on tour at one point, like they're hacks, but like they're on tour here and there. They're shooting like way over par.
They're playing like us,
struggling to. And
so
Xander
let's
said,
get back to that age-old debate. What do I shoot now if I go to that U.S. Open?
We're talking about this.
I don't think they can. I don't think you can count that high.
With the conditions of Augusta, and we shoot members tees, or we said tee.
No, we're talking. It's got to be pro everything.
Yeah, Danielle's like, I'm breaking 100.
No,
I'm like, no, you're
man,
not.
I did not.
We were saying 150 at Augusta.
I think I said it would be something like 110.
Yeah. The real question was if you started on the green.
And you guys were saying,
could you win it? And we said,
but you guys were saying 130, and I'm like, I'm not a great golfer,
pros
but I know how to play.
A scratch golfer would shoot like 20 over. A scratch golfer would shoot 20 over.
Really?
Like Nick Dunlap, who's a pro golfer.
So then doesn't it logically follow that I shoot 20 to 25 strokes worse than a scratch golfer?
Okay, let's do this. Daniele, we've all seen you play. You close your eyes and we'll put our hands up if we think you could break 150 at Augusta.
I'd say actually, I think like 130 at Oakmont.
I still have a lot of cash in my pocket, Carter.
I'd say over under 130. But Augusta's probably easier than Oakmont in certain ways because the rough is we don't hit straight drives.
It's true. We've been to Augusta.
There's more forgiveness at Augusta. Anyways.
Well, good stuff, guys. Appreciate your time and sponsorship support for us.
Of course.
And looking forward to having lots more great discussions with
Pleasure,
you guys.
guys.
Thanks, everybody, for listening.
Appreciate it.
Thank you.
Thanks for listening, guys. It's Neal, your co-host and co-founder at Keystone Mortgage Investment Corp.
and Director of Investor Relations. I'm also a real estate agent, real estate investor, and business owner.
And your co-host and co-founder of Keystone Mortgage Investment Corporation, Ryan McNeil. Keystone MIC is licensed under the Mortgage Regulations Act of Nova Scotia, license number 3000844, and through FCMB, license 89280. Keep in mind, the views of this podcast are for informational purposes only and are not financial advice.